Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. And we've got some red on the screen as investors weigh the latest tariff-related news from President Donald Trump, including his new tariffs aimed at foreign automakers. The Dow Jones Industrial Average dropped 0.4% to close at 42,300 points. That's down 155. The S&P 500 lost 0.3%, closing at 5,693. And the Nasdaq Composite 0.5% lower. So all in, you've got several automakers under pressure. And of course, we are counting down towards Liberation Day, April 2nd, when we are expecting reciprocal tariffs to kick in. And to help us navigate what's to come, we have chartered market technician Jay Woods. He's the Chief Global Strategist for Freedom Capital Markets. Jay, good morning. Thanks for joining us. How are you doing today?
Doing well, Ryan. Good morning to you as well.
Yeah, seems like markets are going to be keeping you busy for quite some time for all the tariff talk. What's the latest you're keeping an eye on when you look at some of these reactions in the markets?
Yeah, it's been a crazy environment. Every 5 minutes, it seems like there's a new headline that's changing the direction of the market. This tariff talk, tariffs on, tariffs off, reciprocal tariffs, car tariffs today. It's been keeping the traders on the floor of the New York Stock Exchange busy, like myself, and it's been one whirlwind, and the market has been under tremendous pressure. You mentioned, quote-unquote, Liberation Day on April 2nd. I call it Tariff Day, T-Day. We'll see what happens. There's been a lot of bluster, but today we got real shots fired when those car tariffs came and hit us.
Yeah, how bad is it for you in terms of the impact that the market's pricing in right now? Because you do have the potential for this to be passed on to consumers, the potential for inflation to tick up higher, and there is a lot of moving parts in this equation.
Yeah, and I think you hit it when you say potentially could do this and potentially could do that. The uncertainty is what's really gotten the market on edge, and that's why we've had a 10% correction in the S&P 500. These, and when you live through a correction, it's not fun, but they do happen on average once a year. The average yearly drawdown is about 13.5%, 14%. We went down a little over 10. We rallied back, and now we're just kind of in this holding pattern where we actually are up for the week with 1 day to go of trading, but it's been uncertainty. And until we get an idea of what the final answer is with these tariffs and what the retaliatory strikes may be, this market is not going to rally anytime soon because these companies, they can't give guidance. They don't know exactly how to react and what to react to. So right now we're in this holding pattern, and the market sells off first and then deals with it second, and that's what we're seeing.
Yeah, that's a very good point. The retaliatory measures from other countries could also have an impact. Now, of course, the potential for a deal to be struck. You had Donald Trump saying, we might compromise on a couple of things if they strike a deal on TikTok, for example, with China. So there are so many things to consider when you look at the horizon. So many companies are keeping a very close eye on how this all plays out. As an investor, what should you be doing right now? Should you be staying on the sidelines or cutting down your exposure in the markets right now?
Well, if you're cutting down your exposure now, I think you're a little too late. What you want to have is a shopping list. You want to look at some of those big names that you may have said, I missed out on NVIDIA when it ran as much as it did. Amazon, it's been, going up for quite some time, and now it's finally pausing. Apple is a little bit on sale. I think Apple may have some more work to do, but when you look at big names like NVIDIA, you look at the semiconductor space, you see a Broadcom that had phenomenal earnings, symbol AVGO, and it had great guidance, but right now the tide is just taking out all these boats, and we're getting a washout in some of these tech names. So to me, you want to look at where they're priced and you say, what, if it goes down to 5%, let me buy a little bit here. Let me try to put some money to work. So I would not use this time to sell stocks. I would look for an opportunity if you have money on the sidelines or if you have disposable income to put to work to look at some of these stocks that have been beaten down, because if we do get a knee-jerk reaction lower sometime next week or tomorrow after the PCE, it could be an opportunity to buy when you look at the long-term horizon on some of these great names that have not been doing so well to start this year.
Yeah, where does Tesla place on your shopping list? Because I don't think they are affected as much when it comes to tariffs.
Tesla is one of the craziest stocks in the world. I did a report on this just last week. Over the last 5 years, if you bought Tesla 5 years ago in November of 2020, you're pretty much even. You've experienced 2 doubles and 6 drawdowns of 40%. It is a trading stock. It is not an investment stock. If you invested in it before 2020, then you had a great ride. It still has some drawdowns. But right now, it is so volatile. And Elon Musk is one of those iconic CEOs that will have a cult following. And then with the opposite of that is having people that don't like him. So we're seeing a lot of angst in that stock. I would trade it, not own it. We're still waiting for autonomous vehicles. We're still waiting for, who knows what happens with Starlink, if that political bent has a problem. So with Tesla, I would wait for a serious dip like we've just had, and maybe you want to put a little money to work. But over the long term, there are more questions than answers. But the one thing we've learned over time, you never doubt Elon Musk. So he has made back most of these sell-offs over time. Time you have one, there is a headline around it. This time, does it feel a little different? Maybe, but I think Tesla is a trade on Elon Musk, and he's one person I don't bet against, but I also don't bet on because I can't stand the volatility myself. So I stay to the sideline. I've traded it many times over swing periods, a couple days, a couple weeks, but it is a tough stock if you're going to follow the market every day to live with the ebbs and flows of Tesla.
Yeah, Elon Musk being Donald Trump's BFF does cut both ways. Now, taking a look at what's been playing out in the automotive sector, interestingly enough, used cars have been doing well because of the expectations used car prices could go up with the tariffs. So that's been helping the likes of Hertz and Avis overnight shooting up more than 20%. So what do you take away from the movements behind these stocks right now? Are they sustainable?
They're sustainable over the short. I mean, right now, the prices of cars are going up about $5,000 a car on average if these tariffs are to go through the way they are. So where do you look? The used car market, it's going to go up. And who has a nice existing vehicle fleet? Avis, Hertz, those rental cars, so they can offset that. And then people, instead of buying cars, especially people in the big cities, they're not going to buy a car. They're going to rent a car because it's going to be cheaper for them to do it. So right now you have a nice pop in these stocks. It could continue. There's also a sizable short interest in Avis and Hertz, 13% in Avis, 14.5% in Hertz. So you may see more of a squeeze over the coming days. Will it be sustainable over a long period of time? Probably not, but you still may have a little more, more pop in this trade over the next few days.
All right, talking about what's been popping, we've been seeing gold prices doing well in the past few years. In fact, last year, I believe it outperformed equities. What's your move or what's your position on gold right now, especially with the backdrop of all the uncertainty?
Yeah, gold has been the best place to go. And when things are uncertain, what do people do? They look for that safe harbor. They look for gold. Gold has made a tremendous run. In fact, somebody at work and we were just talking about it. I don't know if you want to chase gold at these levels, given the run it's been on. Now that everyone's talking about it, it seems like we're closer to a near-term top. And maybe you want to buy it on some weakness. But if we see this sell-off continue a little bit more, you may get a little euphoric run as everyone panics and goes into gold. Once again, when you look at stocks that have made moves, I wouldn't want to sell stocks that are down right now. I'd look to buy them cheaper. And gold, I would not chase it right now, given the run that it's had. It makes sense, but the market's down 10%. Gold's a safe haven. It's not a bad place to park a certain percentage of your assets, 5-10%. But to me, right now, I think the play in gold is closer to a near-term top, and you may get in a little cheaper over the coming weeks.
Yeah, talking about that top, it's now at around 3,055, and year-to-date, 16% higher. And S&P 500, for comparison, is down some 3%. So that's what's been playing out on that front. And we have been in conversation with Jay Woods. He is the Chartered Market Technician and Chief Global Strategist for Freedom Capital Markets. Jay, thanks so much for your time and insights. Always great chatting with you.
Great chatting with you. Take care.
All right, catch up again soon, Jay. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.